And that means we are now live here on our YouTube channel. It's our halftime report show put together here at Tackle Trading so that you guys can better run your daily routine in the stock market as a trader. Markets are up, in many different areas across the board. Still got weakness in technology, strength in industrials, strength in financials. We'll take a peek at it. Some interesting news items over the last couple of days over the weekend. There was some, conflict happening over in Saudi Arabia, a couple of drone strikes. We also saw that the $1.9 trillion stimulus bill was passed by the Senate, moving into the House, but more of the same in terms of market performance, market action. Starting the week kind of on a healthy note here. We'll break down the technicals, the sectors, and all the news here today. Got the full crew joining us. Matt, Mark, myself, Cody on the back end, and Young Tanyan producing the show. Welcome out. Hashtag Team Tackle right in the chat as you're coming into our show today. Let's start the conversation. Let's have a lot of fun. Always positivity. That's rule number one. And if you're brand new to the channel, make sure you click that subscribe, click the bell, and everybody else out there, give me a thumbs up. Let's get the analytics up and let's get the word out on our halftime report. Let's get down to business here. Matty, how you doing today, sir?
Tim, I am absolutely fantastic. I'm excited to be here with the crew to break down the market activity to start the week that will be a fantastic week trading, I believe.
And Marky, sir, how are you doing?
I have my festive colors on today.
Wait
I'm
a
not
second.
wearing the
Is
normal.
gray?
This is like a
Gray's-
purplish color, and I got my purple shirt. Listen, I'm.
Are we sure that's purple?
Listen, it's not black and gray, which is my normal forte. So listen, I'm excited. Listen,
Is purple the color of royalty? Is that what it is? Right.
Listen,
you feeling like a king today, Mark? The king.
I'm feeling good, right? Like, listen, I mean, we've taken the chance over the last couple weeks. Hopefully, I've repositioned to some areas. Those areas are doing pretty good today. Stock pickers market moving forward, and that benefits those individuals that pick right.
Absolutely. It has been a stock pickers market. We are going to look at the sectors here in just a few minutes. We've been talking about the themes that have been developing now for several months, actually, since post-election and when those trends started kicking in. We will look at those, break those down in another day where industrials and financials are leading, like I talked about in the intro. But let's start with the broad markets here, Matt, and let's talk about the technical reaction. Friday was a very important day for the charts. In many perspectives, we were below the 50-period moving average on Thursday. We had a nice rally. We broke the action down Friday during the show, and it ended on strength. And now here we are in the weekend, through the weekend, coming in and showing a little bit more strength, up 0.5%, almost 1% now. What are you seeing in the chart here on the S&P 500?
Yeah, I don't think we're going to see any triggering action on the actual broad market in the short term, given the fact that you do have mixed technical reactions going on. And so from a daily chart, you're right in the middle of the range here between 37.30 and kind of the top end of the range at 39.40. And so you're kind of right there in no man's land from a technical perspective. You see the market kissing up against the 20-day moving average, tested underneath on the overnight action, had a weak futures market open. And, I was talking to Mark last night just about a few different things, a little bit about J-Pal, I'd say a little bit about J-Pal, but about some other things. We were talking about the market, and both of us said, I don't think, and we were talking about the NASDAQ specifically, but, I don't think you could be shocked up or down 2% in the NASDAQ where we were last night. And so when you're looking at this on just a very short time frame here, you see the futures market open here and throughout the overnight action coming into the Asian hours, and then you get into the European hours, and then obviously here is the US hours here. But you have this reaction, just a little bit of profit taking, nothing really concerning here. Comes in, double bottom, slows its momentum. But then right here, right when that cash open starts happening in the US, you start to see a little bit of a pickup, and then it just starts running on the cash open, and now you're threatening a breakout there. And so whenever you see this type of volatility in the broad market, you always lower your time frame. That's just, standard technical analysis 101. You lower your time frame to find a clear picture, or a clearer picture, I should say, on what is transpiring in the actual marketplace. And now that we're past last week, you can kind of see this as a little bit of a double bottom from a technical perspective. The beautiful thing about hanging out with us in the halftime report every day is we look at this on a daily basis, talking about these levels and when they're forming in literal real time. And now you're looking at this from a historical technical perspective, saying, got a double bottom, got an increase in support levels. Now we're threatening another breakout. The intraday charts from the broad market perspective are establishing a little bit of a bull party here to start the week. But again, it's early. But from Friday's response, the momentum is carrying to the cash open here today. But again, we had the scanner report meeting over the weekend. We sat with all the coaches of tackle trading for about 3 hours there on Friday afternoon, and all of us were like, yeah, I made this statement, and I'll see if the halftime crew agrees with this. But I said, hey, coaches, listen, I'm going to make a statement. You just tell me if you agree with this or disagree with this. When you're reading the S&P 500, you are not getting an accurate read of what is actually transpiring in the stock market today. And obviously most of the coaches agreed with that, given the fact that this is what typically happens. When you see this type of wide range volatility over the last 2 weeks on the backdrops of this type of slowing momentum, a little rounding top here, you have these volatile, uncertain conditions. And what first starts establishing itself is not necessarily the broad market, but looking at them from a sector perspective. And so if guys, take my mother, for example. My mother does not watch the halftime report every day. Shame on you, Mom. She does not participate in market related news very much, right? Just that's not her. She's been a small business owner for her entire life. She's been in real estate and hard assets for the majority of her life. And everything about this game we call the stock market is completely foreign to her. And yet, what has she been hearing over the last 2 weeks? Just negative stories, bloodbath here, bloodbath there, negative story, negative story, negative story. And yet when you look at the S&P 500, we're literally 2% off the all-time highs. And when you look at the individual performance in the sectors, guys, in this environment where a 30 basis point bump in the long-term yield, and again, let's take a look at let's go. Is it ZN?
And I believe, yep, on the 10-year. Yep.
So this is what we're reacting to, guys, right here. This is the storyline that is playing out in the stock market over the last 2 weeks. Now, Mark, what is the theme that the market has been driving on since Biden's presidency, since the election?
Since the election? Well, you had the vaccine news on Pfizer came out, which spurred the reopening. You had stimulus, so you had a gigantic push. I mean, it's been a rotation since there.
But the rotation has been a cyclical rotation.
Oh, absolutely, yeah. I mean, we've
based
talked about it about
on an economy.
Times.
Yeah, like every day since the election, right? But it's been a stimulus-backed theme of an economy reopening up, and as the vaccine distribution starts to increase velocity, the economy will reopen up quicker than what a lot of people believe. And so that's the general theme. It's an economy reopening up backed on, these micro themes, but it really is just an economy reopening theme. And let's make this simple. Getting the economy back to pre-COVID levels, correct? Can we all agree with that? That's kind of the theme. Well, if you take a look at the 10-year note and what we're looking at in terms of the bloodbath that's been transpiring, the so-called quote unquote bloodbath that's been transpiring out there, it's based on what's happening in the bond market, right? About how, well, inflation's going to creep its ugly head. The bond market's going to have to, price that in. Well, again, if you once again think macro level here, instead of just fixated on what happens on a day-to-day basis, the theme is an economy reopening up theme, backed on vaccine distribution, backed on the Fed put, backed on the fiscal stimulus argument. And now the bond market is simply reflecting that truth. That is the only thing that is happening so far. Now, can it become a bigger storyline? Certainly it can. But right now, when you look at pre-COVID bond levels, all you are is in the last month. And here's the presidency, guys, right here. Ever since then, the bond market has been reflecting that same truth that has been transpiring in the stock market. And now the 10-year note and many notes out there are now back to pre-COVID levels. And so what David Tepper said today, I felt was fairly spot on, quite frankly. And he said what he believes is the bond market is simply correcting itself to adjust to the pre-COVID economic reality, since that is basically the theme that has been transpiring. And what I said to Tim about David Tepper is he just said it a lot smarter than we have said it in the last 4 months, but it's the exact same commentary. So that's where I'm at.
Yeah, and if you really think about it, I love this analysis, by the way. And those longer term charts on the bond market. You look at 10 years or whatever it is. These prices coming back to where we are. This is the longer term range that's been for quite some time. 1.6% is where we're at here today. So yeah.
Well, and I said this last week. I said it the week before. Is I'm not certain the Fed doesn't like this normalization of the bond market.
Sure.
Why do you think they've kind of sat on the sidelines a little bit? Because I think they kind of are secretly saying, you know what, it's kind of crazy out there.
They get interest rates to go up, but they
we
don't have to raise rates.
We don't dare raise rates because they'll punish us. But please, bond bullies, can you do it? Can you do it? A bunch of cowards at the Fed.
There are a couple of bond auctions this week. Going to be interesting to see if they can sell some of
those. Well, they were
trashed
trash week and a half ago. We'll see if the higher rates can attract a little bit of the interest here. But there are some fairly important bond auctions here. You got a 3-year bond, you got a 10-year bond note this week, and you got a 30-year note. And we're talking 58 billion, 38 billion, and 24 billion respectively on those. So pretty big bond auctions. We'll see if the additional basis points can attract some buyers there.
And the S&P here coming back up into these ranges, obviously within 2% of that high, intraday analysis. Obviously, we're going to be coming into some technical levels. Do you expect, Matt, a little bit of a fight here this week as it's going to have to rattle back and forth? It's not exactly, 100% clear that it's just going to shoot to the moon. So
there's certain environments that I have found myself in life where I expect to fight. And yes, this is always one of those moments, but I don't think it's the fight that other people think it is. I think what you're saying is the continuation of the storyline that's been playing out for the last 4 months. It's just got more eyes on it today. And so, no, I don't believe a new fight is beginning. I believe the continuation of the old fight is happening, and that is just a sector rotation fight, in my opinion.
Yeah, and that's fair. And I do want to look at sectors here, and just a couple of minutes, kind of break those down, talk about them. We do that each and every Monday, and do talk a little bit about our rankings. As I'm looking across the other indexes, Matt, I'm seeing the Dow looking very similar and performing very similar. The NASDAQ reflects the weakness in tech. Rut's coming back up off the bottoms a little bit. Index perspective wise, S&P's got the blend, it's got the balance, it's got all of the sectors in it. So where the real stories are on those XL levels, on those sector levels, because they paint a very, very different picture. Can you flash through the indexes just real quick? And then if you want to go sectors now, I think it's a good time for it. We can talk sectors if you'd like.
Well, again, I mean, we can look at the indexes if you want, but the sectors are the story.
That's right. Yeah.
Right. That's just where my head's at. And so, and so I can break down the Dow, or I can look at what people are actually going to be looking at.
Give me those sectors,
the industrial sector,
Give me those sectors.
Yeah, exactly. All right. So when you're looking, and everybody, for the pro members of Tackle Trading, there are a couple reports that they focus on a weekly basis to prepare for the market. Our two watch list reports for the equity market, the stock and the options report, obviously is kind of foundation 1 and 2. The newsletter at Tackle Trading, and Coach Gino wrote the newsletter this week analyzing the sectors, going through the rankings. That's obviously that the belief in the top-down approach to the market. For those of you that have been around Tackle a while, where our head is at regarding the top-down approach to the marketplace. And so I feel the newsletter is a great place to really get that foundation of top-down analysis in the market. And in that we rank in the newsletter specifically, we rank all of our sectors. In the commodity report, we rank all the commodities. And in the Forex report, we rank all the currencies out there. And so in the newsletter, basically, we were looking at a market condition, and obviously every week, the first thing we rank, because it is the barometer, is the S&P 500 itself. And Tim, we had a very spirited conversation on the ranking of the S&P last week on Friday, because we were coming on the backs of the one-day rally, but that was right after we clipped the 50-day moving average. And as a lot of us are pure technicians, some of us are technicians with the top-down kicker to it, and that's where I'm at. And we had I don't want to say there was a difference of opinion. It was just more about what is the accurate ranking for the marketplace. And given the fact, I think what the winning argument was, because we did end up maintaining price action, maintaining our ranking of 30 on the S&P 500. We did not downgrade the broad market in the face of the volatility, specifically in the NASDAQ and the discretionary space. Personally, I felt this storyline is a sector-based storyline and not a market perspective storyline. And so I just didn't I think at the end of the day, we just really like that double bottom on the marketplace that we saw on Thursday and Friday. You were breaking out of that intraday analysis on Friday. And so, I mean, timing is always important in the market. There's no doubt about that. If you were to ask us on Thursday with the breaking of support, this is probably a downgrade situation. There's no doubt about that. But given the fact that we did double bottom, we broke those intraday resistance levels, I think the coaches felt really comfortable maintaining that 30 handle on the S&P 500. And with that 30 handle, let's take a look at and a 30 handle for us, guys. Sometimes I just assume everybody understands tackle lingo, Tim. But what a 30 handle is for us in our scouting reports, guys, is it's a slightly bullish ranking on the stock market. And I believe that slightly bullish ranking reflects the stock pickers market, number one. It also reflects the technical trend slowing momentum and the increasing volatility here. Yes, we're 2% off the all-time highs, but you're also 2% off the all-time highs in an increasing volatile condition, with sectors separating themselves in a fairly, probably a more volatile news type media perspective. So you do have that from an S&P. Now let's take a look specifically at the sectors. And where I want to start with here today is I do want to start with the downgrades that we had this week in the marketplace, and where the pain is really at. Yes, we can talk about what's happening in the bond and all that, 2-year versus 10-year versus what's happening with the 30-year. And later on today, we're going to geek out on some Fed talk, guys. So get ready for a nice little Fed talk podcast later on today, because we are going to talk about what the Fed, specifically what's in that full still box, right? We talk about the Fed toolbox and all these things they can do. We're going to do a little bit of a what's in that toolbox. What can the Fed do, and what tools do they have at their disposal to help alleviate some of this monetary, economic, or stock market pain people realize every now and then. So we'll have that conversation, but let's take a look quickly at where the storyline really is, and that's in the technology sector and the discretionary sector. Now, specifically technology here, we did do a 10-point downgrade, went from the positive 30 slightly bullish ranking to that of a positive 41. That puts us in the neutral to slightly bullish leaning category. But given the fact that you violated your support levels, both in terms of horizontal previous resistance as well as moving averages, those are some fairly substantial violations of support, and you got to reflect that from a ranking perspective. And so when you're looking at rankings and you see that positive 40, sometimes when we're looking at neutrality right below a resistance breakout, that's that positive 40. We're anticipating the breakout. That's actually a fairly decent scenario to be in, because again, you're in net neutrality and you're just waiting for that breakout in the marketplace. But then again, you have other degrees of that, because there is subjective nature to how rankings happen. Well, when you're looking at a short-term bearish downtrend, and this is a short-term bearish downtrend in the NASDAQ, you have this short-term bearish downtrend, lower low, lower high, lower low, lower high. You also have that in the discretionary space as well. You have a lower low, lower high, lower low, lower high. You have these short-term bearish downtrends, but when you have a short-term bearish downtrend in a longer-term bullish uptrend, that typically shades to the longer bullish term uptrend. And that's why you have a positive 40 ranking and not a negative ranking in a short-term downtrend, is because the longer trend is always more powerful than the shorter trend. And most of the time in the market, guys, these short-term downtrends, you hear them into stock market phrases of pullbacks, corrections, those types of language. These corrections typically do get gobbled up over time by the marketplace, and the market recovers its price action. Not every time do they spin out of control like a pandemic or like a market cycle crash. And so a lot of times they do become buying opportunities. And so your ranking, when you're when you're looking at those rankings, guys, and you're like, well, it's a positive 40 ranking, Matt. Look at what's happening here. I mean, this is bearish. Yes, you're right. The short-term trend in discretionary and technology is bearish. But given the long-term charts being intact, and given the fact that longer-term charts are more powerful in probability analysis than short-term charts, you have to have a positive rankings. And Coach Tyler always says this: you got to buy in the face of fear. And I'm not saying that today in discretionary in the NASDAQ, but that's kind of that mentality at the top levels of the market when you see these corrective behaviors. And it's one tick and it's one day, but that did come into the zone of the 200-day moving average in discretionary, Tim. I just wanted to provide some context to the rankings in discretionary and technology, given the fact we've had 40 rankings in utilities, real estate, staples for a very long time, right? A very long time. But discretionary and technology were the literal leaders of the marketplace over the last 10 years. And so I wanted to provide a little context to those downgrades today in discretionary and finance. Now, healthcare also got a little bit of a 5-point downgrade, just to reflect kind of that same conversation I was having with discretionary and technology. Fighting back here today really has a lot of spirit. Got those spirit fingers out here today. Got a lot of spirit there, Tim. But overall, you're still underneath the 50-day moving average. You still have violated some short-term pivots. And these charts in healthcare are not exactly pretty to look at. And that's the kindest way I can put it. And so when we're looking at this, again, reflecting trend and pattern, obvious downgrade here, not the 10-point downgrade we saw in discretionary and in technology, but regarding the 5-point downgrade in healthcare, put it into that same line of positive 40. So once again, short-term downtrend, overall bullish uptrend, puts it into that positive 40 category. The last one that got the downgrade here over the weekend was real estate, and that's just to put it in line with trend and pattern right there at 50. Obviously, you got short-term trends, intermediate trends, but we felt the 50 burger was really, really appropriate for what's happening longer term. So that downgrade in real estate was more reflective, just to put it into the ranges of its historical price action more than anything else. Now, the story, though, the absolute story for me anyways, and the story of this week, is going to be what's happening in the industrial sector here today. The industrial sector, we don't radically rank things at Tackle Trading very often, but there was a lot of passion around ranking the industrial sector in the face of everything that's been happening over the last 2 weeks. And the industrial sector got a nice little upgrade right into that 20 spot. And so the industrial sector, a big upgrade right into that 20 handle. You got to love, and again, we upgraded on Friday. You got to love the price action here today, but it would get an additional 5 points here today with this type of price action. You got to love the breakout in industrials. We've been crowing about industrials for a very long time. We were like, please break out. Ooh, You gave us a breakout a little bit. That's good enough for us. Breakout again. Ooh, that's good enough for us. Breakout. Go. Let's roll. This, come on, guys, this is really good here. Industrial's moving. And you know what? There's a lot of potential trades out there. You got to love Caterpillar's bullish flag-based pattern continuation. You got to love Deere kissing off the 20-day moving average. There's a lot of trades happening. Check the scouting reports at Tackle Trading to find the best picks out there, ladies and gentlemen. But you got to love the industrial movement. Obviously, high base breakout. It's a no-sell day here, guys. You got to like what's happening there in industrial. But the storyline, once again, isn't just industrial. Again, you have this massive cyclical theme playing out. So let's take a look at the other components there. Energy, unlike industrials where it's breaking out, you got some clean charts out there to take some action on. Energy here is probably performance-based. They are by far the best performing sector over the course ever since the election, but specifically just in the last month and a half, it's the best performing sector. And so typically when something's overextended, we'd like to hesitate with the rankings a little bit because we do put a technical component into the rankings. But with the strength in energy and still a lot of stocks to trade there in the energy space, and obviously a little bit of bump in oil prices on the overnight action as well. One of the highest rated sector for us at Tackle Trading is the energy space. A little bit overextended. It's a little bit tricky to find a good trigger with a great stop loss, given the fact that you are now overextended, and especially when you couple this from this movement here that now takes into account all of earnings season. So you might want some hesitation a little bit, maybe a little Allen Iverson hesitation crossover, put it in the crock pot, let it cook a little bit. But man, energy is hot right now, and it looks like it's going to be continuing because this theme is once again playing out. And I don't want to come across as, that like we're out of the woodworks yet. We're not. The S&P is ranked at 30 for a reason. We're in a volatile, uncertain condition. The bond market, the craziness in the bond market is not over yet. We got very, very important bond auctions this week to get through, and you got a major, major, major test of that 10-year bond note. So I'm not saying that. I'm just saying as of right now, these themes that started 4 months ago are continually staying intact, and so you just got to go with the price action. And right now, energy, performance based, theme based, any based, it's got the eye of the market, and the market's focused on it.
It's been a juggernaut.
It's really as simple as that, Tim.
I just want to throw one thing in there. I'm looking at the numbers here on the price scale, Matt. It's doubled since the election.
Yeah.
27 to 54.
You don't see sectors do that.
No,
you see stocks do that.
Mm-hmm.
You don't see sectors do that. It's only when, honestly, it's only in this environment. I don't think you could see a repeat of it. Yeah. It's only in the environment of the pandemic, with energy being the worst sector coming into it, with a fundamental condition of just nastiness, and to get so far beat up in those environments. I mean, it was like bankrupt or grow. That's where we were.
It's crazy price movement from a percentage wise, but it makes sense for me. I mean, if you go to crude oil, the price of crude oil at those lows was at levels there in the mid to high 30s that we didn't know if these companies would make it, long term, if it never got up. And so, the price movement, when you look at it, it just makes sense. It's a whole different world today with oil and where the prices are.
Again, not even the prices reflect what happened with crude oil last year, right? Because you can't chart that. You can't chart that negative 41 handle that crude got last year. So, it's just, I don't think it could be recreated. And I certainly don't believe that momentum is going to continue. I don't think in 6 months from now, we're looking at energy at, what would it be, 106?
No,
no, that's not what I'm saying. It's just, but I do think your confidence is growing, though.
It could be in the high 60s.
High 60s, absolutely. High 60s is what?
I mean, that's a good
20,
percentage
25%.
return.
It's a good percentage return, and it still beats the market. I promise you that, if that ever happens. So, we wanted to reflect the strength of the trend and the momentum. We wanted to rank the theme that we saw happening in energy, and obviously we've been bumping up energy over time, but that 15 handle is the highest rated sector as of right now at Tackle Trading. Let's take a couple look at the financial sector very quickly. Once again, financial, very similar to industrial, breaking out, running here today, and a lot of good trades in the financial sector are happening. And unlike energy, with industrials and finance this week, yeah, you can say you're chasing. If you're not in something right now, you could say you're chasing today. You could say that the market's up 2.5%. You can make the argument you're chasing today, and you might want to hesitate because chasing doesn't really work typically. However, you can't say you're chasing this breakout.
No.
And there is a difference there. Okay. This breakout is a one-day breakout with confirmation here today. And again, nobody knows what the future holds, but doesn't the probability have to reflect a next leg up at this point?
Well, and I also think like if you have very little exposure to finance, or zero exposure in trading or your portfolio, I mean, you're not going to get many clean patterns like that all the time. And so when you get a clean pattern and you get a breakout and maybe you're low exposure, it's something definitely to consider.
Well, and I also want you to think about something, guys. Your opinion, my opinion, anybody's opinion on what something is overvalued or undervalued or overextended or underextended is always subjective based on how you see your time frame. It is always subjective. A trader might look at this weekly chart and say, oh my God, look how far up we're overextended in the financial sector in a pandemic. And I would not disagree with that. I'd say you're right. We are very overextended. We are range up in these. You're absolutely right. You can't expect that momentum to continue. But what about the individual who sees this action as the resetting of the market cycle? Do they have that same opinion of overextended nature? If their view of things, and let me go back a little bit of time frame here, guys. Let's just go back weekly. Let's just get a little bit more time frame. If their opinion in this recovery is we're right there in the recovery, in the new market cycle that did that. And so it really depends on how you see this, in my opinion. If you do not believe we're ever going to recover from the pandemic, then yes, we're probably completely batshit crazy and overextended, and the end of the world is certainly coming next Tuesday. I understand that. But if you see this as an economy reopening up play at the beginning of a market cycle, then you have a different perspective. That's all I'm saying.
Yeah, same thing with energy, same thing with financial, same thing with a lot of these different movements that we're moving into. Because if you believe in the themes moving forward, it's painting a picture not just for today, but it's also been painting that picture for 4 months since the election and moving forward into 2021.
Yeah, and again, time horizon is very important here because it does help you understand overextended, overvalued, undervalued, all that jazz, right? How we make decisions. When our mother, who once again, hard asset type individual, she comes to Tim and me and it's like, hey, listen, I got X amount of money and I'm looking to do something with it. And what was our answer, Tim? What's your time horizon?
That's right.
And she said, quote, my time horizon is 10 years. And we said, you have to get into the stock market. And she is 70 years old.
Yeah.
Now, if she would have said, my time horizon is 1.5 years before I need that money, we would have had a different answer. Context matters. Time horizon matters.
Agree, 100%. Love the analysis too. By the way, Marky, we talked crude oil for there for just 1 second. I do want to get your take just on the drone strikes in Saudi Arabia.
Before we get into crude oil, though, let me finish with sectors.
Apologies, brother.
Let's take a look at communications very quickly. Again, one of the storylines that I feel is very confusing. is the storyline in comms. Comms most likely should have got caught up in the discretionary and tech bloodbath, and it didn't. And for some weird reason, that's given me some confidence that I shouldn't have, I don't think.
No, it's the same Bitcoin thing, right? If it held up during the volatility, it makes you.
I know, but in my head, Mark, like in my head, I keep convincing myself of things I'm not seeing. And I'm just saying, why? Like, I just want to know that answer of why. Why did comms not get caught up in the bloodbath? They were standing right there to get shot. They ran with them the whole time, and they get off.
Mm-hmm.
It makes me interested.
Mm-hmm.
It makes me love that breakout at 74. I'm not gonna lie.
Yes.
It makes me love that breakout at 74. And Tim, before you got into crude, I just wanted to pull up the comms chart because comms, once again, the upgrades we saw this week were cyclical based.
Mm-hmm.
Energy got an upgrade, industrial got an upgrade, finance got an upgrade. Things that got a downgrade obviously were not, right? Discretionary, tech specifically, defensive sectors in general, just because nobody cares about defensive sectors right now. It's a growth environment, right? And so I just didn't want to leave comms off that list because comms did get an upgrade here. Comms, let me get the actual ranking. No, maintain. We maintained the ranking right there at 20, right there in the finance, right there in the industrial ranking. And so if you're looking at industrials and finance breakout, loving those, I think comms could break out too. It hasn't done it yet. But I just wanted to get comms on people's radar because that 74 breakout looks legit.
Yeah, I agree with it. And there's some really interesting strength within the communications sector. Take a look at Disney today.
Disney opening up, buddy.
Mm-hmm. Yeah, it is the one in that sector I'm looking at. I like the Google range if it eventually breaks out, but Disney's looking great.
My wife yet. She's got Disney World.
You don't think she's on the email list, bro?
She's got Disney World. Maybe she is. She
has a microchip in her brain that will insert.
I don't think we could keep this information from her. I'm just telling you. You have a Disneyland trip in your future this year. I'm just going to tell you that right now.
No, I don't.
You're going to be on Mr. Toad's Wild Ride or whatever it is. Come on.
Oh. Dude, no. No.
Oh.
I got too many excuses this year.
Tim, he's not going to be on that ride. He's going to be on Mighty Matt's.
Mighty Matt rides Splash Mountain.
You guys enjoy it. Okay, enjoy it. Enjoy the moment.
We did. Any other sectors? Any other sectors that you didn't hit yet here, brother?
Not anymore.
Let's do some commodity roundup here, Mark. What are you seeing in the commodity market, my friend? You did the report over the weekend.
By the way,
keep people
real quick.
informed. Oh yeah.
Just without us laughing at Disney, that $200 breakout looks good on Disney.
It does.
It looks really good on Disney.
Yeah, it's looking beautiful here today. Yeah, and it's bringing up the Dow, holding comms up. It's looking great.
And it's hard not to like Disney for a position trade, right? Like
it's hard not to like Disney for any trade right now.
It's like when I look at some of these themes and the opportunities. I mean, you can always swing trade, but like when I see this stuff, I mean, we had some COVID data over the weekend. First of all, Biden announced that the date where vaccines would be available to all Americans, they're moving up 2 weeks to mid-May now, which was already a 2-month bump at the end of May.
Mm-hmm.
You have global cases going down all around the world. You had Texas reopening 100%. I think
Utah lifted their mask mandate, I believe.
Yeah.
Like April, is it April or May 14th? Like what's the date?
Coming up here. I can't remember the date.
It's like 2 weeks or something like that. I can't remember.
And so, it's happening, right? And
I think what are we at right now? 20% of the U.S. is vaccinated or something along those lines. We're vaccinating, I think, on average over 2 million people per day. Pfizer and Johnson & Johnson have their little mega merger deal, singing Kumbaya, holding hands, sending out vaccines in droves to everybody. Mark, we talked about this last week, but we've been talking about it for 6 months now. And the distribution and the percentage of distribution plays a role here.
Yeah, and so when I look at a position trade, and since I'm primarily a theme-based trader, I just see Disney having so many news stories in the next 6 months. this park and attendance this,
Yep.
and I mean that's not even counting all of their
Movies.
movies. I mean, and their obviously their subscription service with Disney Plus. I mean, you can see the catalyst and the stories and that line up. Man, it seems like a good bull call spread long-term position trade.
You want to be a part of Disney over the next 10 years.
You know,
Absolutely.
Yeah,
but
I agree.
the mouse.
The mouse, the house.
We're
of
not.
mouse.
How long is that going to last? Like the Mighty Matt thing. Like.
It depends on how long it's funny. So it always has a natural cycle, my friend, just like a trend. Just like any trend.
I promise I'll only bring it up when I think I can get a laugh.
I'm glad this is not happening long term.
I understand. Let's take a look through the commodity markets, Mark, as well. Obviously, you talked a little bit about some of the themes that are developing and happening out there. I was looking at the markets this morning. You know, copper had a little bit of a bounce, gold trying to find some support. Mark, just walk us through. What are you seeing out there? You know, whether it's energy, whether it's the metals market, what are you seeing out there?
The backdrop for energy and oil is amazing. Listen, whenever you get a little overextended, this is the thing you learn on commodities. Remember the gold run. I mean, commodities need to behave in an orderly fashion, or you'll get a pullback every once in a while or some consolidation. The macro theme behind oil is amazing. Metals, gold and silver. If you can, I mean, they've been really caught up in the short term. Platinum as well, and I think they. In this real rates, the algos trade on real rates, and so during these real rate, is the platinum chart finally working on things?
It is, and it looks good.
And so when I look at platinum, I mean, this is when I was scouting things this weekend, I was like, the price action makes sense. Real rates, algos trade. Precious metals slide. You saw this with gold. You saw this with silver. You saw this with platinum. They slide when real rate headline, real rate headline, real rate headline. They're going to get hit during that environment. But especially those industrial metals like silver and platinum. And that platinum, I mean, come on, look at that chart.
That chart looks good.
Mm-hmm.
I'm sorry.
I mean, right.
It's an easy trigger too above the 90 EMA. It's a good looking chart.
And if you're looking for ways to make, there's a few ETFs, PLTM. A little bit later, I'll have a little platinum trash that makes cash play. Because most people don't trade the futures, but those setups, it makes sense. The price actions in metals make sense. The algorithmic trading driving it down makes sense. And the chart patterns, especially the platinum right now. I mean, that's just a good looking chart, right?
Mm-hmm.
And then of course our friends at Bitcoin holding up. Gosh, I just want to look at that platinum chart for a minute. I don't.
It's a good looking chart. Like it's hard to see the end of the world happening with platinum looking that good on that chart. But
no, I mean, right.
But platinum's not as easy to play as say silver or gold, right? And that's
you don't have as many instruments.
Exactly, it doesn't have the liquid instruments like ETFs and all that we have.
But the one thing about it, go back to that PLTM, and I wrote about this a little bit in the Commodities Report several weeks ago. The one thing about volume has been getting a little bit better in this area of the market. I mean, it used to be abysmal. And now it's not great, but it's getting better.
Hey, listen, GameStop did help find some of this. You gotta give a little credit. Retail found this area of the market through that storyline.
Mm-hmm.
The ETF of commodities is what I'm talking about, because they got caught on the SLV silver train a little bit, started researching a little bit. So maybe volume does pick up a little bit here in this space.
Mm-hmm.
And then of course Bitcoin. I mean, and we talked about this a little bit on Friday, how last week in its volatility. Bitcoin was up on the week, and I mean, have you thought more about that, Matt? Because I spent some time this weekend thinking about that.
Yeah, it's crazy. It's crazy. It gives me confidence, and I don't
destroyed. Tech sells off. So many story stocks. Tesla. I mean,
I know
so many things got obliterated last week.
Bitcoin should have got beat up.
And I really do, because I was like. There's no way I would have bet Bitcoin wasn't there.
honestly,
that
it's the same
mess.
conversation I'm having with myself in comms versus tech. I'm like, you should have got beat up and you didn't. Netflix belief that they're going to maybe pay a dividend at some point in the history of the world, like that held it up. Like, so like I have this weird confidence in comms right now that shouldn't be there. And I kind of feel the same thing about Bitcoin. Like it should have got beat up, didn't.
I mean,
Wow.
Bitcoin just feels that if you get a trigger, a catalyst, a
Well,
something.
and let's take a look at the trigger. I mean, the catalyst can be one of many things, obviously.
I mean, right? It could
But
be
the
a lot.
trigger, yeah, it literally could be one of many things. What you don't want is an Elon Musk catalyst. You
Oh,
do
you
not
do not
want
want
that.
an Elon Musk
You do
catalyst.
not want an Elon Musk. And guys, Elon, we all love him. Just come on, shut it down a little bit. That's it. Just simmer down a little bit.
Because it doesn't last. The last several times he does
No.
come out and tweet and all that kind of stuff, the price action gets gobbled up and swept up within
because we
within
don't know
a
if
few
he's
days.
really just trolling.
Exactly. Well, I think we kind of know he's trolling. So
Well,
he does love trolling on the Dogecoin
Hey,
thing.
you guys know
especially.
Kevin O'Leary, Mr. Wonderful from Shark Tank.
Yeah.
I mean, last week it came out that he's putting 3% of his portfolio into Bitcoin, and Kevin O'Leary used to bash Bitcoin relentlessly. That corporate adoption thing we've been talking about for what, 4 or 5 months now.
So what I just learned is Kevin O'Leary doesn't have any social credibility because it didn't move Bitcoin at all.
Oh no, listen, his Q scores now, but I like him a lot, like, you know.
Yeah.
But I
learned he capitulates. I learned
That's right.
that.
Finally,
but the one thing that, like, it just goes to this: you have the institutional adoption, but then you also have more and more individuals that social acceptance, you know, critic, basher to, hey, you know, let's put a little money here.
Well,
and when institutions start to do that,
you're right. And 3% is fine. Like it's under 4% is every trader shot in the dark type stuff, right? You go buy an option, it's 2%, right? So good for Kevin O'Leary. Congratulations. I still like the $53,000 trigger here, Mark. When you were talking about, we don't know what the catalyst is. Nobody really does. Look at this neutrality over the last week in Bitcoin. Yeah, you look at the daily chart, it looks crazy. That's just neutrality there, really. And now what do you have coming into neutrality? You got an increasing support level, horizontal triggers. And so the market is getting ready, guys. If the market was not getting ready, it would not have bought this. If the market was not getting ready,
that's when I went to bed last night.
It would not have bought this. And it is. And now it's getting ready for that breakout there. And so yeah, it's primed. It's primed, Mark. It's ready. The gas is in, right? It's ready to rock. It's just a matter of what that catalyst is. And so we all know the catalyst on Bitcoin can be at any moment, at any time, on any time frame. And that's the difficult nature of Bitcoin.
Yeah.
And that's why holders love just holding.
Yeah, 24-hour market that is globally influenced, all kinds of different reasons. Yeah, I agree. I agree.
But I do like that. I mean, you gotta like the technicals that are forming here.
You know, and that is now a very noticeable resistance level on the intraday chart, right? You know, you've tested it several times.
It's 52 by 53. So I mean, you got an aggressive trigger, I believe, above 52,300, and you got a conservative trigger above 53,000. And so you're looking at that from an intraday perspective. But again, holders will say, I don't have to ever deal with that because Bitcoin breaks out whenever it wants to, and it doesn't care about what you think or your time frame.
And resistance doesn't break till it breaks. But absolutely. So keep an eye
on it. Quick peek at the dollar as we round out the market skyline. Then I want to get into some
I missed the old extended looks at the dollar.
No. You killed those, bro. That was you. You
out of your spite for my happiness.
Maybe a little bit.
Listen, you can't go get your SpaghettiOs mid-show and share them with the class. All right,
you can't sit there.
Where's my snack? Where's my snack? Mark doesn't just get a 5-minute break whenever we bring up the dollar. Come on.
You're acting like we're sitting around a camper, just popping up your can of chili and just eating it with a spoon and acting like that's fine.
Oh. the dollar is strengthening here recently.
Dollar's very
obviously.
strengthening here.
But, and there's a lot going on behind the dollar and those types of things in terms of interest rates, the implications, the tie-in. I don't have a lot of analysis on the dollar here today, besides just the fact that it's carrying through on that momentum.
I ranked it at 30 based on technical analysis and nothing else.
Yeah. And the stimulus seems to be moving forward through the week. We'll be talking about it more as it passes the House and all those kind of things as the week develops. Let's move into some.
I say we do a 45-minute deep dive right now on what's in this latest edition of the stimulus package.
I'll give you 4.5 seconds.
Good.
It's gonna pass this week, and a lot of money is getting done and pushing out into the market.
More money.
Extended unemployment benefits, $1,400.
Oh, it doesn't matter. It really doesn't matter. Nobody cares.
Yeah, stimulus is coming and will be passed.
Latest stimulus. When's the next one? 3 months from now?
That's the thing. When do they start talking about the next one? Is it infrastructure? Is it this or that? Right.
And Tim did ask me a question earlier today, Mark. And I don't want to talk about it. I just want to think about it. We've injected close to what isn't now with the 1.9. We're about 10 trillion, guys.
With the Fed and fiscal.
With the Fed, with fiscal and monetary stimulus in the past year. Mm-hmm. If we were to look at this today, in everything we went through in the last year, do you think we might have done something different with the money? And the reason I ask that is this. Yes, corporations paid down some debt last year. Yes, consumers got by last year. But it's $10 trillion, and I look around the United States and we don't have an improved quality of life. Mm-hmm. And I think that's an open question. Just to think about.
It's one to think about. There's no doubt about it. I mean,
I get
in infrastructure,
but we needed to do this and we needed to do that. We needed to do this. But again, where's the investment in our future?
Mm-hmm. I agree. Those conversations need to start happening as we move forward. Speaking of moving forward, let's move into stock talk here next. Couple of quick corporate items. We've got a few stocks from Trash That Makes Cash, I believe. Mark, I think you found a couple of them. We do that on Mondays.
Man, there's so many good industrial finance.
I know.
Oh, so many.
It's tough looking at the trash.
It's a tough day for trash today.
I know.
There's some class out there today. There's some blue chip out there today. There's some sexy out there today. There's some DSM out there today. I mean, my garbage man just picked up my trash.
We'll see if we can unload some of Marky's trash out there as well. You never know.
I did get a couple trash picks though.
Sounds great.
And again, by definition, we call them trash because they're penny stocks, and we call all penny stocks trash. But what somebody's trash is somebody's. What's somebody's garbage is somebody's. What's that saying?
Somebody's trash is somebody's treasure, I believe.
There you go.
Something like that. I don't think that's exactly right, but
it was cute.
I got a lot closer than either you clowns.
One man's trash is another man's treasure.
Yeah,
we weren't even in the same sport.
I was playing hockey. I don't know what you guys were doing. I was still taking out the trash. So there you go.
Right. Speaking of trash, General Electric's the first company I want to talk about here today, GE. Now, you guys know my opinion of GE. I'm biased against this company for years and years and years. They've been strengthening with industrials. The chart is looking very good. You cannot knock the technical analysis behind that. They announced on Monday that they are going to go into a $30 billion deal with an aircraft leasing company called AerCap Holdings out of the UK, I believe. AerCap jumped on the news. GE is also moving up on the news. Positive catalyst. Stock's been moving forward. It's looking great. Either of you see anything in the chart that's grabbing your attention? Just a beautiful trend moving up. GameStop.
GE. No.
It's GE. GameStop next here, GME. And obviously this has been, in the consciousness of the market here for a couple months. It went crazy, fell out of favor, was down there consolidating. Now it's picking up again here, guys. So
guys, I know, but it's doing the same thing it did last time. Again, I want this stock to go to $1 million per share because I just want Wall Street to be punished. But guys, you already put Cohen coming in to running GameStop e-commerce business. This is what led this movement here. This is what was preceding this movement. It's the same storyline today. Mm-hmm. There's nothing new. This was Cohen going to run e-commerce. This is Cohen going to run e-commerce. GameStop. There is other news.
Yeah. I think they're going to rehash any story they can.
Like I know, but like it's the same
It is
headline.
the same news. Ryan Cohen, the guy that
Like
got the catalyst started there in January, was
there's no
announced to
new
do,
news.
I guess, his job. It was announced that he was going to
Like
be doing his job.
like Ryan's doing his job.
Yeah.
Okay.
Yeah.
Hold on, Ryan. Fantastic.
That's right.
Ryan went to work.
It is.
Oh, fantastic.
I mean,
Ryan
it is
took a
funny.
break from Ryan went to lunch and had a roast beef sandwich.
GameStop
Come
up
on,
12%.
guys.
Ryan had
What
roast
the
beef
hell?
sandwich. Yeah.
Like good. GameStop go up another 30%. I am happy about that, but
I mean,
find
that's
a
the
new
catalyst
headline,
I'm looking
guys.
for on Bitcoin right
Like,
now.
I
Right?
don't
Hey,
need
Ryan,
Ryan's
go work
daily
for Bitcoin.
itinerary. Come on.
I agree. It's funny, but it's true though. I mean, if he did order a sandwich in New York City, GameStop might move 5 points. So it is, it's the way that it is right now. Stock is obviously moving up here today. A couple other ones here. Coca-Cola got an upgrade. In fact, you guys want to play upgrade downgrade? I got 3 or 4
Yeah,
good
I
ones.
like upgrade
I
downgrade.
got a couple.
All right, I
upgrade
do like
downgrade.
upgrade downgrade.
Let's start with Coca-Cola. Okay, KO, obviously the huge consumer product company, consumer staple. Everybody loves a Coke.
Coca-Cola flying here today. What's going on?
RBC Capital Markets upgraded Coca-Cola to outperform from sector perform. Consumer staples have been a dog. Matt?
We got a specific sector outperform. Oh, these are my favorite ones because you actually get something to compare it against. Like the other upgrades and downgrades are just trash. Like do a legitimate upgrade downgrade. Like give it a comparison. I like this one. So it's against the sector, and we're playing agree disagree against the sector. So we're looking at XLP here, guys. This is the sector. This is the sector right here. This is Coca-Cola. Now, if you guys can find a discernible difference against that sector, have fun.
Well, let me look.
Show me the sector itself again.
Chart-wise looks very similar, right? You know, I'm looking at
the only difference is the upgrade on Coca-Cola today versus what's happening. So you are seeing separation today, but that's again following the announcement, not before the announcement. I personally, though, I would have Coca-Cola in front of the consumer staples sector. I would have them in front. I don't think it's a big deal, quite frankly. It's really sixes to me.
Yeah, I think it's sixes to me too.
But I'd say Coco's slightly
I hate
in
the
front.
whole space. So.
Oh, I'm not a fan of staples, like at all.
Oh, it's not been a good mover. Yeah.
No. You look at staples long term, and you look them on all dips. You don't want to trade into strength in staples. Come on, what are we doing? Yeah. This is staples, right?
Yeah.
But no, I mean, you want to look at it longer term, and anytime something like a defensive sector is at its 200-day moving average, obviously your interest has to be peaked, given the fact that Coca-Cola is going to pay you a dividend, given the fact that Coca-Cola has seen how many market cycles now, Tim?
Oh, well,
how many recessions have Coca-Cola seen? How many has Zoom seen?
Zoom.
None.
0.
This is the first, guys. And so, yeah, you do have more confidence if you have a little bit of concern about this economy reopening up theme sticking, right? And it's not a guarantee, guys. Like, it's just not. We did put $10 trillion in to get to the space where we don't have a question that's answered yet. So yeah, it's that story has not been written yet. So yeah, I do think it's okay to look at some of these defensive areas of the market and saying, let me tickle some of my portfolio with it. But no, these two are sixes. But I would agree technically because it is a slightly better one.
Here's one I'm not sure you're going to agree with. I'm interested to see what your take is. Give me Marvel Tech, the semiconductor company, MRVL. BMO upgraded Marvel to outperforming its sector and industry from market performing. Matt, do you agree that this is one of the better tech companies out there? There's so many big names, and also semiconductors specifically.
This is a courageous upgrade.
This is, especially after the earnings last week.
You gotta give these guys a lot of credit for putting their name out there. What was it, BMO?
BMO.
What was the name of the? Oh man, hold on, I got some other BMO analogies going on. Marvel is a fundamentally strong candidate. It's a very liquid stock that you could definitely find value in. I think this is an overreaction to what's happening in the tech space in general. I think when you're looking at the semiconductors, Marvel is one of the better fundamental, has more proper value in my opinion than some of the other companies out there. Now, with what happened in their earnings last week, we do have some valuation concerns, but overall, I think this is a fairly fundamental company that's should be looked at its 200-day moving average. Let it navigate the 40 handle on that from a technical perspective. But regarding Marvel, I don't know if I could put it in front of the stocks right now. That was a tough report last week. I couldn't do it. I can't put it in back of, I don't know, Taiwan, AMD, Micron, AMAT, Broadcom, Nvidia. Like, there are some really, really good components in this space. And, you know, when you're looking at the Tackle 25, there's some of those components I could not put on there, but there's some really good components in that space. I don't think I could have Marvel as an outperform. I like the company and I think it's an overreaction to it, but I think that's really courageous to put your name out there like that. And I actually give that a hell of a lot of credit, I like that type of analysis. I like it because it triggers thought. You're not just chasing, you're actually doing your homework and your analysis. You're looking at the fundamentals. You're not just chasing whatever the next craze on Twitter is. I love the analysis. I hate to disagree with it, but I do. I don't think you could put Marvel in front of the others.
Yeah, I don't think you can either. There's just too many other good names in there. If you want to keep it neutral, market perform, all that kind of stuff, I'd be open to it.
And again, if it is market perform, yeah, I would agree. But outperform, you're seeing something that I'm not right now, and even though that could play out, and I love the analysis. Like, I just disagree with it, but I love the analysis. Give them credit where credit's due. Whoever put that out there, just give them credit.
We'll see if you love the next two bits of analysis, because
I doubt it.
I doubt it as well. I'm going to throw this one to Marky though. Give me Bumble, BMBL. In front of their very first earnings report after an IPO that's now been fading for 2 months, they actually got an upgrade to buy it from
Who got paid? That's all I want to know. Who got paid? Check bank accounts. Who got paid? You upgraded a stock after an IPO that's down 30% in front of an earnings. You're pumping here, guys. That's wrong. Right. Who got paid? Check accounts.
Mark?
No, it's just, listen, Bumble is one of the many IPOs that, hey, they issue at a certain price, and then before it even hits the chart, right, it's up 100%. That's been happening since the election. I mean, it's just nonstop. How do I say it nicely?
I thought I said it as nice as you could. Who got paid?
Fundamentals don't back up the price. And remember, just because it's down 30%, that don't mean it's cheap. It's still a very, very, very expensive stock.
Value has nothing to do with the price of a stock.
What?
Value has nothing to do with the price of a stock.
Yes, it does not. So, yeah.
Yeah, can we see an earnings?
Yeah, come on.
One? Just one?
It's like in 2 days. Like, you couldn't wait until next week.
And they have a nice dating app. It is a nice dating app, but there's a lot of nice dating apps out there. I like this.
They're not they don't have first comer status here.
You know,
I'm especially impressed with their CEO and their founder. There's no question about
100%. No, her storyline is an amazing storyline. Kudos, amazing. You are it truly is an individual who probably most people would have sold the position. She maintained it. She had a belief in it. She had conviction. No, it is an amazing storyline. I still want to know who got paid upgrading in front of earnings.
Somebody did. Listen, or somebody was going to get fired. If they didn't.
I like this space. I like online dating space. Match.com has been one that I've been talking about for years. Listen, I mean, wake me up when it's 15.
We've had a few jokes over that.
Wake me up when this is at $15, and then maybe I'll give it a look.
I don't know if you're going to get that, but
I don't.
We don't know. Let it
see.
develop is all. Let the thing develop. Let it play itself.
Let's see in earnings. That's all we're saying. That's all we're saying. Let's not say it's a great buy. It's a terrible company. Let's see in earnings, guys. Let's get some numbers we can actually evaluate before we start just making shit up.
I agree.
Listen, they need to figure out, because I have a lifetime membership to Bumble.
You do?
Wait a second.
Yeah, I do.
Oh,
They sell lifetime memberships.
What?
Why would you ever buy a
How are they
lifetime
going to get any
membership
more
to a
money out of
dating
me?
site? Isn't the idea you find
Shut
a date
the show down.
What's going on here? That
Listen,
makes no
but
sense.
when you weigh it out,
Hold
what the
on, Mark.
monthly membership
I'm interested.
is
Please tell.
versus the no, I'm serious. From a business perspective, how are they going to get more money out of me? And I hate it when I saw the lifetime membership. I'm like, that's a mistake. That's a mistake, because it just was. So
Okay.
You don't know those ads. You don't understand those ads that are coming down the pike there, buddy.
Yeah.
So
Maybe they're just going to sell data at some point. We'll find out. Just like any other company. Peloton next here. As the
they could become their best Robin Hood that way.
That's right.
Yeah.
Peloton here. Economy's reopening. People are going to get back out there, and yet they got an upgrade to a buy here today from MKM Partners to buy from neutral.
No.
This one makes no sense to me.
No. Not all 200-day moving average balances are the same.
Listen, we've been talking, and we don't talk Peloton all the time, but I think the general consensus has been the entire way up. No.
We did it. We missed.
If you missed the initial break in last March, ever since then, we've been a no.
You had a moment to believe in this company, and that moment is no longer here. No.
I mean,
upgrade. What are we doing? Are you kidding me? Upgrade?
Mm-hmm.
Oh, come on.
Makes no sense. Makes no sense.
Last one, they're stuck, dude. They had to upgrade because they're stuck. They bought in at 140.
I get it, but why would you upgrade here? In the face of this is the bloodbath in the market right here.
Technical weakness. They missed earnings on the last one.
And you're picking one of the most highest flying stocks in that area.
Look at that.
Saying,
slap it down.
If you loved a company that didn't make a lot of money at $20, you're going to love a really overvalued company that's never going to make money at $100. Let's rock.
Oh, you sound.
I kid.
Wake me up at $20 and I'll give it a think. So.
And then I'll get maybe two more. I'm going to try SeaWorld first here. SEAS. I know Mark.
Listen, the last time SeaWorld came out, you guys mocked me. Mocked me.
I didn't mock you.
Yeah. Watch this.
I'm going to say the same joke I said last time.
Let's see if you agree here then today, Mark. You might be mocking Citigroup. They actually downgraded the company to neutral.
I actually
by citing valuations.
Listen, I liked the reopening plays last year. And
they downgraded and broke out.
Mm-hmm.
The economy reopening up is really strong.
Mm-hmm.
But I liked it at 23, man. It's doubled since then. I don't see any value. I think this is
it's a momentum chase at this point, and that's all it is. It left fundamentals behind a long time ago here.
Yeah, so. I mean, I like the theme of reopening. I thought there was, but yeah, I mean, that trade.
You got a technical momentum trade here. Is what you have. I mean, they downgraded.
Yep.
I respect the downgrade. I do. I certainly think momentum slows down now. The economy reopening up. This should show you how strong that theme is, because SeaWorld is part of that theme. Same reason Disney's up today, right? Disney's up because California is easing restrictions and they're opening up their theme park, Disneyland. Right
now, and that's why. I mean, now picture this with Disney over the next year, right? Because once something gets going and above, man, I gotta go get me some bull call spread on Disney. I just gotta do it.
Oh, not even a bull put? Like we're just going.
I gotta
man, that's about as aggressive as Mark gets on the directional side.
No, I mean I've been doing that with energy lately. I've done it a few other places.
I like
bull calls are a good play.
I like it. No, it's awesome. I love it.
I just the theme just seems like a no-brainer.
I would agree with Mark on the. I think you got it at this point. It's SeaWorld, guys. I mean, it's SeaWorld. Right. I think you got to have it as market perform right now. But again, theme's really strong. Breakout here is legit against a 50 number. That's really a significant whole number. You can certainly trade that. That's a high base breakout, maybe a flag breakout, but
I think I made $47 selling naked puts on SeaWorld.
Dude, you should have made more money, bro.
I know, right?
Mhm.
You should sell more naked puts.
And the last one, actually,
I'll
think
tell you that bull call on Disney is going to pay out a hell of a lot more than that.
Yeah, it is.
Disney's got a beautiful setup here, and the breaking the 200 round number, that's obviously a trigger there. So,
Yeah.
last one, Target. Target got an upgrade to buy from neutral
saw
from
that.
Guggenheim here. Stock has been under a little bit of pressure here recently.
I
Matt,
just
we
like
covered
to
the
say
earnings.
Guggenheim. Could we have more upgrade,
like
downgrade
Guggenheim,
games with
too.
Guggenheim? I've always liked it. They're ETFs that when I saw
I
it the
know,
first, it was like
Guggenheim.
Guggenheim.
Is
I
that the
just like
famous
it.
building in New York City, the Guggenheim? Or am I
I
thinking
don't
something
know. I
wrong?
just like saying it,
Just
dude.
keep
I didn't
going.
really
Just
want to
keep going.
No, I'm not
discuss.
gonna do it.
You guys
any
just keep
further.
going.
I
Like,
gotta look this up. It is. It's a museum in New York City. I walked through it on my honeymoon in 2005. I remember now it had beautiful spiral staircases and art in it, Matt. So yes, I did remember that correctly. Target got an upgrade here to a buy from neutral by Guggenheim. There you go, Mark. Matt, we covered the earnings
buy
last week.
from neutral, huh?
Yeah.
Oh, that's a tough buy there. But it's Target, and I like Target.
Target's a good brand. They've got a brand moat. They have, convicted
Well, I don't
investors who
care about shopping there.
they will
I get what
love
you're saying, though.
owning it, though. Absolutely. They've actually, and you remember we covered earnings last week. They had some pretty good numbers. They increased online sales and pickup sales and all that, but they've just run so far this year. I mean, they just had such
No, they
an
had
amazing
some.
12-month period.
It wasn't their past performance that was
So
the
just
problem.
a buy
It
in
was
general, not a
there
sector
was a
perform,
no. It's just it goes from neutral to buy. Correct, Tim?
Mhm.
Neutral to buy. Again, it's a good company, a quality company. Like the company, you like the company. Everybody likes the company. It's got a 22 P ratio with an 18 forward P ratio. Price to book is a little elevated.
tough call, isn't it?
Well, it's not,
Because you also
again,
got
time
stimulus
horizon's
checks.
important.
You got a lot of money in the economy that's being put out there. People spend their money. Retail should do
All right.
pretty decent.
Then to help me answer this question, Target or Walmart?
Walmart.
I'm not sure.
Do you like Target with the strength, or do you like Walmart with the value argument? Because Tim, you said not sure about that. I promise you, Mark's looking at it from a value perspective, not from a technical one.
Mm-hmm.
Is that correct, Mark?
Yeah, oh yeah, it's no brand.
Walmart to the lows. You're looking at historical lows, saying this is Walmart. They cash in 178 quadrillion dollars every quarter.
Yeah, and
right?
I like Target. So this isn't. I
Yeah.
mean, Target's not Peloton, right?
Yeah.
Like I like Target. I don't mind Target for cash flowy type plays moving forward. But as
I
far
like
as
the
like
170 handle on Target.
I'm
I
sorry.
do like
I
that
think
handle on Target. I like the 170 handle on Target.
Yeah.
Yeah, I can see it.
Momentum shift on
I
these
don't know.
charts always gonna have me
I think it needs to
concerned.
clean up a little bit.
I do.
I'm gonna say neutral is best for now. For now.
I mean,
I do think as Walmart gets down lower though, there is going to be a big time value argument as Walmart
I mean,
gets
you have
lower.
so many great areas of the market right now too that it's like, if there weren't so many other things that were interested in me, I'd give Walmart a deeper look to owning some.
I'm just still a little worried about this movement in staples.
Staples is terrible.
I don't believe it yet.
I don't believe it at all.
And so,
draw me a trend line right now, like from that
this
thing,
is
right?
this is an area of the market that nobody cared about for 2.5 straight months. Like,
yeah,
we didn't talk about it. Nobody talked about it. People weren't trading there. And all of a sudden, 2 days, I need some more time here on staples. I'm not warming up yet.
I don't trust this price movement at all.
Mm-hmm.
So
Walmart at deeper, lower levels, though, is an interesting idea.
Well, in Target from a neutral to a buy, I mean, if you're going to give me Target versus, say, anything in industrial,
no,
literally anything in industrial, probably not. So I'm going to disagree. But again, good company. It's got fine value. It's just out of favor right now. And let's see it performs technically. I think neutral is the right ranking here, though.
I think that's fair. I think that's fair. All right, guys, that's it for the news. There was one extra item. Microsoft got hacked over the last 2 months. About 30,000 organizations got tapped
Oh,
into that.
that's
Didn't affect
nothing.
didn't affect the stock price at
You
all.
gotta like
So
Microsoft here, though.
I
Look at
believe
that weekly chart on Microsoft.
Goldman added them to a
Isn't it
conviction buy
amazing
list.
though? At this point, 10 years ago, if somebody got hacked, it'd be the only thing we talked about for 2 straight weeks. Now it's just like, yeah, you guys don't know how to protect our data, and consumers don't care any longer.
Yeah, that's right. Yeah, those
Actually makes me
conversations have
really
changed.
sad, actually.
They should.
Yeah.
People our age and older, we're concerned about security and privacy and all
Well,
that kind of stuff. A lot of people just aren't these
my
days. So
my daughter would say, well, you're just a boomer and that's why you're concerned.
that's right.
So that's what she would say, like
That's their
literally.
favorite thing to say. Yeah,
Then again, she's 11, so we'll let that pass.
that's right. Trash that makes cash, Mark.
Trash.
It's our
Mark?
weekly segment.
Type
We've
of
added
trash
this to our Monday
makes
mornings.
cash.
Yeah.
Listen,
Oh, you don't have the song ready to rock? Like,
I don't feel 100%, right? Like,
I'm
Can I
with
just
you.
get
I'm with you.
uptick? Can
Yeah.
somehow,
Can I get an
somewhere?
uptick?
but look at that uptick.
Oh, it's so sad.
There
dude.
we go.
No, I don't know. No.
There we go.
That was
a
only
sad,
75%.
somber. That was
I don't feel
kind of
100% today.
That's all right. That's all right, brother.
demoralizing, depressing.
Listen, and the thing you learn about penny
See.
stocks, this is like an area that I spend a lot of time in, is that when the market is going good, right? Momentum builds, there's some killer trades. When the market gets a little bit choppy, you know, a lot of wild swings. So I found there's 2 picks today I really like, both in the commodity sector. One that we're going to revisit, and it's KOS. It's an oil and gas producer, KOS. Now, one of the things I like and this is one of the things about oil energy stocks in particular, is that there is, let's just say, a high beta on these little oil companies. And so when you have big days and oil's doing good and the market's doing good, can have some really monster percentage days, but the reverse is also true. And one of the things, and I've found success with it on these smaller oil companies, REI is another example in which I do this, is I love buying the dips and then offloading a little bit on the rips. And so, you know, buying the dips, pullbacks to moving averages, like REI, I bought someone to pull that back to the 20 last week. When you come down to horizontal support levels, basically when you come down to technical levels, I like to add a little bit. And then when you get a nice move, unload a little bit and rinse and repeat that process. Because, you know, they are very, very, very high beta companies when it comes to oil itself and when it comes to the market itself. So going back to KOS, so when I get really big contrary movements to the downside, this really, really gets me potentially interested. Now we're coming down and the price movement, once again, this is very, very common. And for some people look at those intraday charts and be like, I can't do it. I can't do it. It's just one of those things that is part of the universe, part of the world. Now, you can always wait for a stabilization pattern if you want to be careful. You can always wait for some kind of technical reversal signal. Like, for example, at the start of February on the GameStop, you know, when the whole energy sector, you know, wait for a reversal signal to get in. You can always do that. But I found a lot of success in these smaller companies on oil, believe in oil, right? Oil's down today, but the price action on oil makes sense to me. Big believer in the space itself. Everything in energy sliding a little bit. When I get a high beta company that's selling off much more than the market on that given day when there's not any given news, I've been hitting it every time in oil and it's treated me very well. So I like KOS. I think the situation is pretty decent.
So basically, it's a buy the dip and sell the rip type candidate.
That's how I've been doing it on oil. And if you want to wait for specific technical confirmation, understandable, right? I mean, I'm never going to criticize that in anything, whether it's trash or class. You know, if you want to wait for that stabilization,
I would say don't catch the falling knife ever, like literally ever. Don't care what the instrument is. Let it fall. Let it find that support level intraday and then trigger. And you certainly have the zone where that could happen, right? You got that $3 handle right here, old resistance, new support. You're also right there where the 20-day moving average is. And so you're in the zone where that buy the dip could certainly occur. But again, it's the level you want to participate in the battle, right? Do you want to be the first individual in the line running into the British, right? I just don't know. And so I think you're trying to fight the battle there. And I'm not sure you want to fight that battle there. I think you let the battle play out, you let momentum shift, you find an intraday level where you see momentum change, you find an intraday trigger, and then you go about it. And so I just, it's like our old man used to tell us, bro, you know, you never catch the falling knife, you let it hit the ground first. And so I think that analysis is here. Again, I think you're in the zone where that certainly could transpire, right?
Yeah.
That 3 handle is a fairly significant support level, but I'd let that occur first.
Yeah, no, and it's one of the things, if for whatever reason out there you get interested in these little penny stocks, which I really do. I freaking love them.
You love this area of the market.
I love it. I really think with oil, you know, and let's say you like the oil ones, like, you know, and I like them all basically, yeah. But like getting a system or something where you do have capital and that to buy dips when they occur, and then unload after that strong movement, and then just rinse and repeat that process. I think that could do really, really well on oil in general. Whether it is Murphy oil or Exxon or XLE or penny stocks. Mm-hmm. I just think oil's the buy the dip candidate.
I know, but again, you got to define what buy the dip is, right? I mean, that is self-defined. I don't think a 1 day rip where the support's getting destroyed is a buy the dip candidate. I think you got to let that settle down, and I don't think it's wise to fight that battle to try to be the tick at the bottom. I believe it's better to let it settle down and pay a slightly higher price, but with additional probability. For me, a buy the dip is, the market is the NASDAQ. That to me is a buy the dip, right? A 1 day price movement in a market is, I think it's a little bit of a different type of analysis, quite frankly.
Well, I mean, yeah. the thing about it is with penny stocks, I mean, it can move down 3 weeks worth of NASDAQ movement in a day or two.
Yeah, I mean, no doubt about that.
Yeah,
no doubt about that. Okay,
KOS. Today.
KOS.
All right, another one. Once again, I like, this is a little company I've been waiting to build a position on, been a little hesitant. It's PLG. They do exposure to both palladium and platinum mining. Not a lot of areas in this space, and we don't have any pure play platinum miners, unfortunately. I wish we really, really did. I wish we had hey, because you got silver mining, you got gold mining, you got copper mining. Wish we had a pure play platinum. We don't. But as the market volatility and most importantly, platinum has sold off, platinum group metals came down a little bit, came down a little bit. Now, I would love it to come down even a little further. I mean, if I ever get a breakout to that old resistance level corresponding with the 200-day moving average, that would be awesome. But I'm starting to look for a signal on this, starting to look for a pattern to develop on this. And we don't have that here today, right? But I really, really do think, and I'm a big fan of industrial metals moving forward. I'm a fan of silver. I'm a fan of copper. I'm a fan of the precious metals with an industrial component like platinum. I think there is opportunity here when the setup occurs. With the market volatility in the last couple of weeks, got a lot of clean technical patterns anywhere at all. I mean, that's just not the world of penny stocks. Clean technical patterns only really occur when the market is nicely chugging along.
What's your symbol, Mark?
PLG.
PLG. Okay.
But, so much about trading and so much about investing is about waiting and putting something on a watch list for something to develop, right? I mean, so much of the money you make is not, all right, let's go look at the screen, let's go do what we do. It is identifying things that if XYZ happens, you're ready to pull the trigger. You're ready to get in. if you get, and I think you want on PLG, is either you want a deeper discount. Once again, for me, it's about 275, 280, and I will buy at that point. But otherwise, waiting for a support level classic reversal technical pattern.
But can I ask you a question?
Mm-hmm.
If the play is for platinum, why not go to platinum? I mean, why not just go to PLTM?
Because I can't sell options on PLTM.
I get it, Mark, but this like platinum group is not an appropriate instrument in my opinion if you're trying to play platinum.
So
it's a loose vehicle that does what it wants to do.
Well, and you and I I know I differ from you two a lot on loose vehicles. I like whether it is USO or
how
Bitcoin
loose
miners.
A vehicle, but let's make sure we're on the same page. USO is closely aligned in comparison to these two. Like loose is a
it's just
gracious
not
word.
With platinum right now.
Like it's just not trading with platinum. It does whatever it wants. And so for me, if the play is platinum, you need to find the best vehicle to trade for platinum. And to me, ETFs that are much more closely aligned with the actual price performance of platinum is probably the better play here. And so I know it's trash versus something else, but PPLT, bullish retracement, deeper coming into the 50-day moving average. If you look at PLTM, you got something very, very similar there. And then you have PGM as well, where you have a very similar there. Not as liquid, obviously, the Barclays ETF is, but I just think if you are looking to play platinum, you need to play platinum and not a vehicle that simply tries to associate the name of that company with the actual commodity.
Well, I mean, everything I do almost entirely is cash flow oriented, and I don't have any options.
I'm just telling you, I would not sell anything on that instrument. It's a crapshoot gamble in my opinion.
So, no, if there's no options, I don't play directionally only. I feel
which I understand that 100%. I mean, that's kind of like your coverage, right? That's you jumped out of a plane not having options, like not having a parachute.
It's like when Tim says, just buy Bitcoin. I can't sell calls on Bitcoin. I can't sell puts on Bitcoin.
Yeah, that's not you.
I can't hedge on Bitcoin. And I can do so many amazing things with options.
I get it. And I know what you're trying to do. You're trying to find a liquid optionable instrument that you can use with platinum, but it's not out there.
Listen,
it's just not.
It is.
You have to take platinum directionally, or you can't play it.
Yeah,
I agree.
You agree. You've never liked the miner, Tim.
The number one thing that popped up to me with PLG is I'm like, it's not correlated with platinum. I went and looked at it. They actually do gold mining. They do all kinds of different mining.
Yeah,
so who knows?
Well, not even that. I'm not like the chart's all over the board.
Yeah.
It trades like a penny stock that got a hold of Reddit that just got off a 4-day binge on, Smarties. Like, no, it's all over the board. You cannot get an edge there.
I think you can get an edge if you know how to play volatility chains that are 100 to 200%. And that's the thing is I get drawn to those type of volatility chains.
Yeah, but that's not the premise. Directional premise.
But you have to be.
You want to make it a directional premise.
I know, but Mark, you're right. For people to do that, they have to be really good in that type of volatility. Unfortunately, only about 0.00001% of the population has that skill set or desire to focus that much on those areas of the market. I think we need to make investing and trading as simply as possible because it's a very complicated subject. If you're going to trade platinum, trade platinum.
It's tough. I wish they had options on Palladium too. These ETFs, I would love them.
And I do think that the platinum ETFs will eventually have options.
I hope so.
Oh yeah, I do too.
It's like some of these penny stocks. I mean, just pull up REI for example.
Wait till you get a $2.8 trillion infrastructure bill. Yeah, the liquidity is going to be there, and the thirst for commodity-based ETFs is going to be there. It's just not yet.
It's like pull up REI real quick just to give you an example, and this has been an amazing, and pull up the option chain, just not for anything specific, but I want to show you. Like last week at this time, they only had 250 strike prices. Like that's it, $2.50, $5 strike, and it just expands out. When there is demand, when there is interest, They will make a market. I think
Well,
those
I
platinum
know,
ETFs
but
will eventually have options.
and what I'm saying is, until that demand is there, don't create something out of nothing. If the platinum is the play, you need to play platinum.
I like precious metals in general at discounted prices. So
I got
Well,
one. Mark,
yeah, go ahead, Tim.
Mark, you done?
I am done.
I got one trash that makes cash. I'm going to give this one a shot. More of a technical setup, by the way, not on value or anything like that. Look at RRD real quick. I did a quick little scan this morning. Now, this company is a consultant and advertising company. They're a marketing firm. They work with other firms to automate and all that
Donnelly
kind
and
of stuff.
Sons. It's either that or a plumber company.
That's
Like,
right. Marketing company.
There's only so many different industries that works in, bro.
Momentum takeoff after earnings, blast out, ran from $2.50 to 4.7. Little flag base pattern coming back into the moving average. Little trigger here today. Momentum on trash that makes cash. What do you guys think?
Technically, I don't have an issue with it. Technically, I mean, you're talking about a momentum trade. You portray it with the momentum, which means you're aggressively triggering already. I don't think you chase it if you're not in it. I think it's a tough one at this point.
Marky, same.
I don't chase momentum on trash. I will sometimes.
Listen, that trigger happened earlier today. I don't think you chase it against 4 or 5.
Yeah, I mean, the thing about momentum, and the one thing I've learned about in 4 or 5 months of doing this with these pennies, that momentum can swift
real
down
fast. Yeah.
real fast. And so I like the breakouts. The best time to get into these plays, like and as you see with RRD, but it happens all 2, 3 a month, 2 through 3 weeks a month consolidation, and then it plays the breakout. Those usually can do very, very well. But once you're into it, I don't know, man.
Yeah.
Yeah, I think you got to be aggressive there with the momentum. So I did get a couple.
All right.
And I think
so far the trash has been trash today, so we need to find something here.
Well, dude, it is only trash until it makes money. You know,
hold on. There was a couple charts that were garbage, like full stop.
Oh, you want clean charts?
Typically that's part of the thing. Okay, but since most of the U.S. penny stock market is their trash is really stinky these days, like it's terrible. I went internationally, Tim. I went internationally to find some trash maybe we could appreciate, somebody else's garbage, right? Because obviously I'm not appreciating some garbage here today. Maybe I can appreciate somebody else's garbage out there. So I went to London, Tim. I went to London and I said, you know what? I like the banking sector. And so let's take a look at a very old bank called Lloyd's of London, Lloyd's Banking Group out of London. I got it as a breakout, finances breaking out, cheap stock LYG breaking out. It would be a technical breakout with momentum above 2-3. I got that one. And you know, Tim, I was like, you know, maybe just hypothetically, maybe I don't love London today. So let's go check out Spain, right? Because if you're going to go to Europe, bro, you got to do the tour, right? I mean, you got to backpack into Europe. And so I went to Spain and I said, give me a Spanish bank that hasn't broke out yet. I think you might be a little bit late, although I like to trigger on Lloyd's. Give me something that hasn't ran yet. And Spain hasn't ran yet. So I was thinking maybe we can go to Spain, run with the bulls a little bit. And so we got Banco breaking out of 3.7. That's the pick here today. In whatever we're calling this trash, international trash that does not smell as bad as U.S. trash right now. I like the breakouts in both Lloyd's and Banco. And then then you know what, Tim, I was like, you know what, we could go miner hunting. We gotta go miner hunting. And where's the best miners out there, Tim? What country has the best miners?
Oh, well, I'm going to
not
say
the U.S.
Oh, wait, listen.
Not the U.S.
I was hoping we were going to go around the whole world
South
with
Africa,
banks.
Brother.
No. I don't like. Are you kidding me? China doesn't like their own banks. I'm not going to Asia right now. I stayed in Europe. Okay, and the central bank doesn't know what they're doing yet. So I had to go to Europe. I stayed in Europe with the banking system. But you know what, Tim? Who's got the best miners in the world?
A lot of great ones in South Africa. I know
There's
that.
a lot of great ones in South Africa. I mean, Canada's got some really tough, gritty miners out there.
Mexico.
Australia, Mexico does. You get some down in South America, some great miners. I mean, Texas has some great, fantastic roughnecks out there. Oh, but South Africa, that is king and country when it comes to the precious metals miners. And so I went out to South Africa here today, Tim. Thank you, babe. And I came back with an HMY, Harmony Gold Mining Company, towards the low part of the chart. Cheap miner. They are cheap for a reason. Yes, I do like other miners out there better, but not in this price range. I think the sell-off in gold is a little bit. Yes, I do think we still have some ways to go towards the downside on gold. Absolutely. We kept that -30 ranking on gold for a reason, right? A reason, but kind of like the Walmart type conversation, I don't think we got that much far to go on gold. I think we need to start looking at the miners a little bit towards the low end of their charts. And for trash that makes cash, I like a 4-4 breakout with confirmation above the 50-day moving average on South African miner Harmony Gold.
11 PE ratio, 5 forward PE ratio. It's got a W pattern on the daily. It's trying to find some old resistance, new support on the weekly charts. There's some stuff in here I grab interest with. Out of the two banks, I think.
Who doesn't like that 4 handle here, guys?
Yeah.
Come on, Mark. I know you're looking at this.
I like it. Listen, if you do not have exposure to gold, listen, you have any exposure to gold. You can do a lot worse than just starting a very small position with cheaper gold mining stocks. It gives you flexibility, cost average down. So I like all of the gold mining stocks.
So Tim, I got on a flight, went 11 hours to London, took the 3-hour flight down to, 2-hour flight down to Spain, hopped on 14 hours down to South Africa, 22 back. I'm back. Which one do you like?
Let me check the option report from the weekend. No, out of all of them though, I like HMY the most.
I can't do anything with the banks on options, which is, they're only having like 45% volatility.
You live in this gross area of the world. You should be well used to that. Like
I don't think you understand how spoiled I've been.
Dude, I think you're Penguin from Batman at this point and need to come out of the underbelly.
The Santander breakout's legit though. I mean, it's got a clean trade.
I kind of like that 4 handle.
I mean, their direction, they're not cash flow plays, but HMY I could make something work. Listen, but I like all the gold miners that have been beat up. I really do. Like at some point, you just have to say, I believe in gold. Like, I think and then have the ability to buy more if it goes lower.
Oh yeah, you don't push all the chips in. You start dipping. It's dip toe analysis as the thing goes down.
But I think it is not a bad time to start dipping your toe in gold.
Let's take a quick look at some of the gold stocks and gold ETFs here. Obviously Barrick Gold here, one of the biggest out there in the world. Don't you gotta be interested?
I think you do
in this area. Right.
Especially if you have the capability to buy more if it goes lower.
Okay. And Newmont Mining, right? I mean, don't you got to be interested in this 50-55 handle range in that support levels? I mean, yeah, it could get busted up and go to 40, but my God, some of the underbelly goes 20% in 5
I mean, this is the thing that you learn as a commodity. Is like, when everybody wants to buy a commodity as it's going up, I'm like, great and everything. I mean, but I mean, when commodity stocks start going down and start to get at attractive levels and you don't have any exposure, man.
So last question, Mark. GDX, which represents all of those miners, right?
Yes.
The silver, gold miners. Don't you have to be just slightly interested in this 30 handle?
All right.
Look at the importance there, guys. 30 to 31. That is vital. Now, it certainly can break, no doubt. But, guys, gold can continue to go down another 4 or 5%, and the miners could stabilize in that environment.
The miners could stabilize in that environment.
So, I think, listen, you never want to come out there and call it your shot, but It
Yeah, I
seems
mean,
like it's in the zone where it's like we need to start looking at that.
I mean, my advice to people on this: if you already have exposure to gold, then you can be patient, right?
Oh yeah. You don't
But if
care.
you don't have any exposure to anything gold oriented or anything silver oriented, like, it's not a bad time to start dipping your toe.
No, in long term, I would definitely start with the
And
bigger
yeah, for
miners
long,
out
these
there.
are this is investment. This is not short-term trading.
Yeah, we're not talking about the trash of the market here. I mean, when you're talking about GDX, Newmont, and Rand Gold or Barrick Gold,
It's the
you're
top of the
talking
market
you're talking the
for
best
gold.
of the bunch out there.
You're talking. I mean, we're talking long-term investing, not even position trading. I mean,
I think you got to be interested in the miners at the low
Agreed.
prices.
Well, and another note here, Mark, GDX is a wonderful option trading.
Oh yeah,
vehicle
you'll
as
never
well.
have any problems writing calls or puts or bull calls, bull puts, bear calls, bear puts. Mark,
Whatever
if
you
you
want.
need to go get your diagonals and your horizontals and your verticals, I mean, the world is your oyster, brother. Go get it.
You can get your whatever fix you need in the
Go
options
get it,
market
bro.
on GDX. That's for sure.
Go get it.
All right, guys, that is our show here today. Let's start wrapping it up. Back on to Marcus. Let's get some final thoughts. Out of the trash that makes cash, I think I do like that gold miner play the best, even better than mine as well. But there's a little bit.
I really
of this,
liked
little
my
bit
international trip. It was
the
a
trip around
trip.
the world. You had a nice little vacation there today, Matt.
It was a fantastic 5-minute trip in scanning in Finvis, but it was well done.
I would love to go to London, Spain, and South Africa. That sounds
5 minutes, dude. All you gotta do is get in my head and deal with the thoughts that go in this head during that 5 minutes.
Since we're not done with trash yet, like, listen, I got a little. It took off while we were doing trash that makes sense. We pull up my Chico Foss.
No.
Why not?
We're done with the show.
Fishies, Chicos.
We're not doing fishies today. You just wanted to say Chico Foss.
Swimming
That's
with
it. That's all you wanted to do. You wanted to say Chico Foss.
Like, seriously, I love Chico Foss.
Chico.
I've been CHS. Put in CHS. Come on.
You can put it in your scan.
I won't make a mighty Matt joke for 1 week if you give me Chico Foss right now.
You got Chico Foss for that.
All right, so we're having a rocking day on retail. Now, once again, you don't chase 23% upward moves on that day. You wait for stabilization to occur, but there is a reasonable breakout level at 3. So in an ideal world, once again, I've liked Chico Foss. I've talked about it several times.
You love Chico.
I do. So yeah. I'm liking the movement. But I don't, and I'm already in Chico. But
you're cheerleading at this point.
But if looking for a new position, like you would in any situation, you got that big candle coming into resistance. You don't chase it heading into resistance. Ideally, you get that 2, 3, 4 day trade sideways.
Listen,
and then break.
Why don't you bring up Chico again today instead of the garbage?
Because Chico's ran 14%.
So what?
In the last 4 minutes.
It's your best pick by far, Chucky.
You and your technical analysis.
Well, let me give you some technical analysis on Chico's here, guy. I love the 3-handle breakout here. Like the daily chart. Oh man, puke it up, garbage. Just puke it up. Just get out of here with that nonsense. But again, look at that weekly chart, smoothing out that volatility a little bit. Look at the 3-handle here. Look at the importance of that 3-handle. Look at the importance of that 3-handle. I like the 3-handle breakout.
Listen, I like the fundamentals. Chico Foss has been because I usually bring things that I actually believe in some level. I've talked about Chico Foss several times. I like the reopening theme. I like what management's done with Chico. Their price to book is really low. They're by many measures the cheapest retailer in the XRT ETF. I actually think there's something here. Now, which means I'm going to get called out of all my shares, right?
Of course you are.
But
it's a good thing.
But that technical setup with the theme, with the storyline,
Mark, I like the 3-handle. I don't think you chase today, but I think you
don't chase today. But once again, this is
you're not chasing anything though.
Dip,
you're in. You've been talking about this for a couple of months.
Yeah.
I'm just saying technically. I who am not in on anything and make fun of Chico Foss and everything. I kind of like the 3-handle breakout.
Man. Come on.
Okay, how do I gotta say it?
Chico Foss.
Chico Foss.
Yeah, that's what I like.
So you go from just normal talk to Like if I'm talking about Google, I just say, hey, Tim, can you go take a look at Google, right? But if it's Chico Foss, I gotta be like, hey, Tim, can you go take a look at Chico Foss?
I bet if you worked at Chico Foss and you said Chico Foss, you would get fired. I doubt they ever called themselves.
You are a grumpy old man. I don't want to hear anything.
Dude, I'm buying you a real hat for your birthday.
Oh, really? This hat is a real hat. Do you like that hat?
Into Chico Foss with that hat.
Say Chico Foss.
Does Chico Foss sell hats? Hold on. Let me look up Chico Foss's online store.
Say Chico Foss, bro.
Do they sell men's hats?
No, dude, dude, be fun. Dude, be 18 one time. Just come on. You weren't even 18 when you were actually 18. Come on, just be fun. Just say Chico Foss. Yeah. Like, be serious. Chico Foss. Chico Foss.
Chico Foss. All right.
See,
there you go, buddy. There you go. There you go.
I like the story on Chico Foss.
I like the three-handle, Mark.
And then you got technical. Listen, I don't like on the stuff I like. Technical analysis is a bonus because I rarely get it. You know.
Well, I do think on Chico on the daily chart you don't, but on the weekly chart, I could see a 3 breakout here.
And there's not a lot of resistance.
You know, he just got some tick wick nonsense at 350, but
I'll give you the 3 breakout. Definitely looking actually really good on that weekly too. All right, let's start moving into final thoughts here, guys. You know, fun, long show, always great on a Monday, going through the sectors, the news, the upgrade, downgrades, and trash that makes cash. If you're out there and you've been watching our show, appreciate you guys. We hit a high watermark there, about 200 here live today. Great to see that.
Up, Tackle.
If you're new to the channel, make sure you click subscribe, click the bell. And if you've not yet done it, guys, I got 3 down thumbs today, which I don't mind. Not everybody's going to love what we get down with, but give me a lot of those thumbs up. Let's offset a couple of those 3 down thumbs, and let's have a great time here. Matt, final thoughts from you, sir.
Oh, 3 down thumbs. What are we going to do?
I know. I think we'll live, brother. I think
lots of press, bro.
Yeah.
I'll be like Jay and Silent Bob when they first figured out the internet and they started talking trash. I'll show up on your doorstep.
Who hit the down thumb? Who did it?
Down thumb?
Chico down thumb this.
I'll Chico Foss all over you.
Chico Foss. We'll try to do a better job talking to everybody's opinion, talking to everybody's books later on. Down thumbs.
Down thumbs.
If
Matt.
Mark's gonna J, I got to Silent Bob his J on this one too. He needs a partner in this crusade, and I think it's a justified crusade. That was good analysis. Top Train's had great analysis in the last 4 months.
And I'll be the George Carlin in the truck, just picking you guys up on the side of the road.
That's all you got to do
for a trip.
Everybody's got to have a getaway driver.
Everybody's got to have a role. Any final thoughts about the markets here?
No, I got a final thought. Listen. It's been crazy price action. Like every day for the last 8 trading sessions, you know, I've put in a lot of time before the market at night or on the weekends. Be like, all right, I want to clean up my portfolio. And every day I do a little cleaning, making sure I'm in the areas I want, making sure that I can buy if there's a big dip, making sure I'm not overexposed. I mean, just proper management, and you know, because I don't know where the volatility is going right now. What's the Fed going to do? How's the market react? I mean, it's been a lot of crazy price action the last couple of weeks, but I have been slowly getting my portfolio to the point where I like it. I like where it's at. I have the ability to buy if we get a big dip, and if it goes up, I'm going to make some money. Spend the time to evaluate where your portfolio is, that you're not overstretched, that you got money if there's a big dip, that you're not over leveraged, but you also have some directional exposure if it goes up, because we don't know what it's going to do right now. It's so crazy right now with the volatility. So just try to find that sweet balance that works for you.
Mm-hmm. Mm-hmm. If you want to get a good feel for what the market's doing today, go look at the heat map on the S&P and go watch the sector analysis from earlier in the show. By the way, there is definitely that split, and it's continuing to develop. Some of these tech names, you know, they're down, you know, sharply, but then everything else seems to be up, you know, healthily. We got a lot of really good setups. We've used that phrase stock pickers market. You know, Matt, in our scouting report meeting on Friday, you even asked the coaches, what do you mean by stock pickers market? When you hear it, we went around, we talked about it, we discussed it. It's the nature of this market right now. You know, trends that are developing, when you find them, setups, you take them. But you have that caution that Mark's talking about. You try to understand the underlying conditions in the market, keep moving yourself forward. Matty, any final thoughts from you, sir?
I love stock pickers markets. Absolutely.
I love them. I love them so much.
Markets. You know, there were so many markets over the last 10 years where they were like just buy the S&P. Like, everything's trending together. It doesn't take talent, doesn't take skill. Literally throw the dart at the Wall Street Journal and you make money. But I love stock pickers market. It's skill set. The advantage is to the skilled.
And it also, I don't know if it's like that with you, Matt, but like in a stock pickers market, things make more sense to me. Like why Disney will go up makes sense when everything is just going up. Sometimes I'm like, I don't trust it.
That's because you're an educated individual in this field. It makes sense. You can understand it. You can price it. You can your eyes don't question the price movement because it's based on a degree of fundamentals, right? But yeah, I do love stock pickers market, and I did ask the coaches, because I think it is a subjective definition, right? But I asked the coaches what they felt, like because everybody was talking about stock pickers market, and I just said, well, what is your definition of a stock pickers market? And everybody gave their definition. It was pretty much all in the same capacity, but you are seeing a stock pickers market where sectors are showing strength and sectors are showing weakness, and it's a market that does take a certain degree of skill in, but it's also a market that I feel is in a fairly decent position right now, that I feel a lot of what has transpired in the last 2 weeks will start to be put in the rear view mirror a little bit, especially this story that's happening in the bond market. I do agree with Mark that the bond market is going to force the Fed to act, or maybe not act, Mark, but maybe hint towards action. Maybe lay out a game plan.
Matt, and I honestly can say we're gonna talk about this in the podcast. And if you want to hear, because Matt, my brother Matt, I called him up yesterday for insight, and I don't do that to people in general because most of the things I know, but I am not an expert on the Fed. And you know who I called? I called my brother Matt to get insight. If you want to know about the Fed's working and the importance in this market, listen to the Trading Justice podcast today.
And we had a wonderful conversation on Operation Twist.
Well, we had a lot of swear words associated with Jay. We had a lot of descriptive words to describe Jay Powell yesterday.
I never speak that type of language, Mark. Whatever. And so I was listening to your colorful language representing Jay Powell as you did. That was not me in any capacity. I was like, you know what, Jay's got a tough job. That's what I was saying. We're we're gonna have some fun later on today in the podcast, and obviously there's three sections to our podcast: the skyline, the feature, and the game at the end. And in the feature, we lay out kind of the market skyline a little bit, what's happening in the market, make sure, the listeners are prepared for the market on a daily basis. In the feature, we typically tackle some type of conversation piece or educational piece or trading strategy that is relevant to the market. And after Powell's commentary last week and a lot of the market saying, what next? Right? We're kind of in this low. What next? We were talking about monetary stimulus for years and years and years. Now we talked about fiscal. Now we're at the tail end of the fiscal stimulus conversation. And so as a collective market, I do believe something is going on to the sense of, well, what are we supposed to talk about now? Because if all we're going to do is focus on what is happening in the economy, that's not something we want to look at very much. And so I do think there is this increasing chatter of where is the Fed and what can the Fed do. And the Fed is they work in the shadows quite a bit. It's meant to be that way. Greenspan said it best. He likes that cloud to a certain extent over the Fed. So we're going to talk a little bit about what's in the Fed's toolbox here today. What is Operation Twist? Why do they use it? Why is Operation Twist being discussed right now in terms of fixing a bond market that may or may not be broken? What is the repo actions the Fed does? What is quantitative easing? Sometimes I feel like I was talking to Tim about this morning, Mark. Sometimes I feel everybody understands the central bank. Like, I just feel like it's this common knowledge. This is like, okay, yeah, doesn't everybody know what Operation Twist is, right? Doesn't everybody know what repo actions are? Doesn't everybody know what quantitative easing is? And the answer obviously is no. We don't teach it anywhere. We don't talk about it in our everyday language. And yet it probably has the bigger impact on our lives than anything else that happens in your life. And so we're going to talk a little bit about it from a definition perspective, a high level perspective. What are those tools, and how can the Fed use those tools? And then obviously we're going to do a little bit of a game. And Mark, I believe the game we're going to be doing is you're going to pick some stocks from each sector in the market.
In fact,
correct?
I put them together
Okay.
while we were on the halftime. I put them in the Slack channel for you and Tim. And like the NBA All-Star game just happened.
I like it.
And I got 20
like
stocks. And Tim and Matt are going to pick their All-Star team.
We're going to build a portfolio.
So they're gonna build their All-Star team for I believe the premises for the remainder of 2021. I got a couple stocks from every sector.
And Mark, you know what? A lot of people focus on like these types of drafts. I love these types of games because it gets into the analysis, but it's always like, oh, who's going to get drafted first? Who's going to get drafted last? And who's going to like those? What I like in these drafts is actually the way Tim, yourself, myself, or other traders think about portfolio design. You know, because what you're not going to see is brand names go 1A, 1. Well, they might with Tim, but they're not going to with me. I'm not Apple, Google, whatever, brand name.
Can I draft Microsoft?
Yeah, you can draft Microsoft. You can put them on your All-Star team.
Tim, it needs who gets the first pick? Like
Tim is a funny mix because he is 50% super momentum trader and 50% I'm keeping this forever. I don't care what it does.
It really is.
That is exactly. You nailed it.
I mean, that's my brother Tim.
Like literally, ask him. He's like, I don't know what it's doing.
Like, you know, because if PLG was Tim's thing, you'd be, I don't care. That thing can go to $1. I don't care. I mean, this is a man who rode Bitcoin from 21,000 down to 3 and didn't blink.
Oh no. He wrote it from 180 to that. Like,
180 to 21 down to 3.
He didn't write it from 3,000. He wrote that nightmare of a train longer than I did. I couldn't even take the volatility. I got off the ride. Tim's like, this is a Tuesday, bro.
Yeah.
Like
well, the way I treat long-term investments is different than how I treat trades.
Honestly, it's how it should be treated, though, Tim. How you treat long-term investments is how they should be treated. Like literally, I made a decision to invest in this company. I made a decision to marry my wife. Let's go. Yep. There's going to be ups and downs. There's going to be goods and bads. There's going to be times where we think it's the greatest thing in the history of mankind, and times we don't. That's investing. That's marriage. Tim, that's how he treats it, and I love it. I think it's absolutely awesome. But what I do like about these drafts, guys, is I like getting into the mindset of it about portfolio design. How you like, I have one tech component, got one material. Oh, what do I need? What does my team need? Because you know what it doesn't need? It doesn't need 5 centers, Mark. It needs a nice little discretionary play. It needs a nice little energy play. You got to have a point guard, shooting guard, got to have that power forward, or just get LeBron and you can have all 5 wrapped up in one. But that's called Microsoft. There's only one of them.
So is Microsoft going 1A?
It's my 1A. If you like,
let's flip a coin. Who's gonna draft?
I don't even know what's
2021 though, man.
Okay, Okay, that does. Okay, so 2021 is the rules, right?
Well, you guys can make whatever the rules you want, whatever you think's the best conversation.
Oh, I kind of feel like investing is the right conversation.
Right, we can do investing
instead of we're holding through X period to take advantage of a theme. I want to have an investing.
Your all-star investing team.
An investing conversation. I like it.
I like it as well. Always look forward to the podcast. We'll be releasing that later today on the website and on all podcasting apps. I did drop the link to tradingjustice.com in the chat. You can go back and review some of the old episodes, some of the newsletters, check the blog out, and make sure you do subscribe to that podcast.
Ooh.
And by the way, guys, I got to tell everybody out there, if you're a pro member, make sure you go to the reports. There's a lot of great setups on those reports
so many
this
good
week.
Setups.
It's incredible. The stock and the option report get published every weekend. And if you're a new member, there is a link to our pro trial. You can go sign up for a 15-day trial, review all the content that we published over the weekend for our reports with stock picks, bullish, bearish, mostly bullish. There was a lot more setups on the bull side this
week.
We
put comms, energy, finance, and industrial on the options report. But gee, look at these great trades. Valero breaking out of 80, FCX fighting for confirmation above 35, Deere confirming, Caterpillar confirming, Expedia confirming, LB trying to confirm, Ally breaking out, Aflac breaking out, ADP breaking out, and that's just the options report from this previous week. Man, they're a good report so far, guys. That's where you start. You start with the reports, you start with the newsletter, and then you hang out with us and in our shows throughout the week. That's how we navigate the
I
market
almost
together.
forgot. Bear market survival guide is tonight. We normally hold out on Wednesday. We're doing traders lounges at night on Wednesday now. So bear market survival guide members, that will be tonight, 8:30 Eastern. You can find how to get there from the calendar page, events page on tackletrading.com.
Can we have a in bear market survival guide? Can we have a surviving a bear pick class, like just surviving the attempt to wade into the bearish market?
Surviving the bearish thought process.
Surviving the bearish thought process. We need a mindset mastermind group for that. Surviving the bear mindset. How not to go crazy in a crazy fundamental world.
That's right. Yep. That's right. Looking forward to this all. You can always find all of our events on the events page at Tackle Trading. Guys, we are done for today.
I got 2 more words, Tim.
Chico Foz?
Chico Foz.
I figured.